BlackRock, State Street, and Vanguard. So the three largest asset managers in the entire world are buying more of this stock. It's awesome to see there. For just to be specific, Vanguard increased exposure by 11%. BlackRock increased exposure by 85% over the quarter, and we saw State Street increase exposure by 60%. What I'll do in this video is I'll go over some of the institutional buying. I'll go over the Wall Street analyst ratings. I'll go over the recent investor relations pitch. I will go over the short interest. I'll go over the financials, and at the end of the video, I will give you a price prediction for TeraWulf. So with that being said, let's talk about it here. So like I said, BlackRock, Vanguard, State Street, all buying more of the stock. And we also are seeing exchange-traded concepts come in as a top 10 buyer, increased exposure by about 10%. It's an active name. And then we saw Morgan Stanley increase exposure by about 200%. Obviously, an active name there as well. So active and passive firms on Wall Street are buying more of this stock. And then let's take a look at some of the Wall Street analyst ratings for this company. So TeraWulf has 5 bullish ratings on Wall Street and 0 bearish ratings. That tells you that Wall Street has a general consensus of bullishness for the stock. And we can see the most recent update was on 11/14 of this year. We saw Canaccord Fitzgerald maintain their overweight rating for this stock, but lower the price target to $3. So overall, still pretty good to see that. Even if they lower their price target a bit, and the stock's basically at $3 right now, it's still good to see that Wall Street overall has a general consensus of bullishness for this stock. The other companies out there, the other Wall Street firms that are bullish on this stock is Stifel, Compass Point, and Canaccord Fitzgerald, as I said, and then Northland Capital Markets. And those were that was all updated earlier this year. We can see B. Riley Securities as well. So they all have bullish ratings on this stock. No bearish ratings on Wall Street signals that the general consensus is a bullish one for this stock. And let's talk about the fundamentals of this company. So one of the real benefits of this company is they have a sustainable energy source. So this is very common for companies that BlackRock is investing in. So mining stocks that have a sustainable energy source is very attractive to a company that has somewhat of an ESG tilt, like BlackRock, like State Street, like Vanguard. So it's almost nearly impossible to get a ton of widespread institutional investors if a company doesn't have a sustainable energy source. So I'll just skip right to the facilities for this company. So we can see here that their New York facility has a energy source that is 91% zero carbon hydro and nuclear power. So awesome to see there. Like I said, sustainable energy is crucial to receiving investments from Wall Street at this point in time. Obviously, Wall Street has a huge ESG tilt. Even if they're not talking about it publicly, it's still behind the scenes. And then their Pennsylvania facility, they have their powers coming from nuclear power. So once again, very low emission power source. That's going to be a huge bullet point for those Wall Street investment firms. But more broadly about the company here, so we have self-mined Bitcoin at about 533 in Q1 of 2023. Revenue self-mined about 12 million, and revenue per Bitcoin of about 23,000. And we have cost per Bitcoin of about 8,400. So good to see that the cost is well below where that Bitcoin price is right now. And then with that being said, they also have a expansion underway at LMD. So the immediate expansion ability, Lake Mariner, as well. So they're leveraging 18,000 of Bitmain's network, or excuse me, newest generation SJ19J XP miners in first large scale development worldwide. And then over 50% of WULF's equity owned by management, board, and insiders. So their operational goals are to maximize profit, repay debt, and return value to shareholders. I believe those are pretty good goals. And then they have the 4 Ps is what they're calling it: plugs, people, power, and priorities. I want to focus on this priority and power. So power, sustainable, scalable facilities. So like I said, ESG tilt, that's good for investment. And then ESG principled and practiced. Once again, ESG is basically a green light for institutional investors. So it's awesome to see that they are really highlighting that here. And then we can see the amount of miners they have at each facility. So they have about 48,000 miners at Lake Mariner and 16,000 miners at their other Pennsylvania site. And then there's self-mining under development, about 18,000 miners at Lake Mariner. I won't go over these numbers too much as they are somewhat dated. This is a couple months old here. It's just their most recent investor pitch. So these are their 2 sites, the New York site and the PA site. Like I said, so really want to make this distinction here. So they own outright this New York site, but they only own about 25% of this PA site, which is powered by nuclear power. So just wanted to make that distinction here. But overall, I think this company has a great opportunity to really benefit as we see Bitcoin, tend to, or I shouldn't say tend to, but likely increase in price. And then with that being said, let's take a look at the short interest for this company. So we have a 25% float. Actually, 25% of the float is sold short. So 25% of the float is being sold short right now. And we have 615, or actually, excuse me, this company, according to Fintel, ranks out as the 615th most likely stock to have a short squeeze out of the roughly 4,500 stocks that are covered. So Fintel here, very respected website for financial information, especially for short interest. They rank in the top 25% in terms of short interest likelihood, or it should be short squeeze. So that's the short interest. But with that being said, let's take a look at the financials of this company. So we have a price to book ratio of 4.6. For those that don't know, that basically tells you that the market cap is 4.6 times the value of their book, or the value of their assets. So 4.6, decent number. It is above WULF's 5-year average of 1.7. Obviously, the company isn't EPS positive, but we are growing at a very fast rate. So over the past 12 months, we saw revenue grow 900%. So this company is really growing very quickly, which is always awesome to see. And then let's take a look at the profitability metrics for this company here. So battling a cold here. So gross profit margin of 57%. For those that don't know, the gross profit is just revenue minus cost of goods sold. Tells you what a company makes for what it sells. So 57% is actually above WULF's 5-year average of 33%. So they're becoming more and more profitable. What does this tell me? This tells me that as long as they're able to continue to grow, this company does have a clear path to profitability, to EPS positivity. And then with that being said, let's take a look at the balance sheet. So unfortunately, this isn't the best looking balance sheet. So we have about $6 million in cash. We have about $120 million in debt. So we are the unfortunate part about this is we aren't EPS positive, and we're spending about $58 million to run this company, to fund our future operations for the next year. It's going to be about $60 million. We only have $6 million in cash, which implies to me that we will likely see either more equity raised, which would obviously be a share dilutive event, or we could see more debt being issued. So don't be shocked if we get that as kind of a news event over the next couple months to years here for this company. And then TeraWulf here, let's take a look at the chart and give a price prediction based on technical analysis. So the next major level of support that I see is around $2.80, which is where shares roughly bottomed in May of 2022. It's also where shares roughly topped out in August of 2023. Therefore, I believe we could see this level act as support, but overall, I think we see a move up to resistance at around $4. I call this level resistance as this is where shares had topped out in July. So I believe this outperforming stock will likely see a move up to $4, and we'll probably see some consolidation around that level. So $4 is kind of my short-term price target. Long-term, I think this stock has potential to go much higher. And we can also see that we're above all daily moving averages. That's a good signal of momentum as well. And then, so in this company's 27-year history, January, February, March have been the best 3-month streak for this company. Obviously, a lot of things have changed over the years, but it is good to see that January, February, March are all positive months from a seasonality standpoint. This screen shows me which months which months are the best for the stock, which months are the worst. It shows me the average monthly return for each month. So the best streak is January, February, March. So we're moving into a bullish seasonal trend. That should bode well and help the stock move up to about $4, which would be, a pretty good move to the upside. To give you an exact percentage for where we are right now, that would be about a 30% gain for the stock. So I think the stock has a ton of upside. I really do like the sustainable tilt. It's one of the reasons why I like CleanSpark, Hut 8 Mining, and some other smaller cap miners out there. So if you're interested in stocks like that, definitely check out my other videos. I cover a lot of smaller cap mining stocks that likely could really, really outperform some of those other large mining stocks such as Riot and Mara. So with that being said, I hope you enjoyed this video. If you did, please leave a like and subscribe, and I'll see you here next time.